discuss the stock of the day. Larsen & Toubro clearly is that stock leading the market single-handedly in today's trade, 3.5% higher. Sanjeev Zarbade now joins in from Kotak Securities. Sanjeev, hi, good morning. Firstly, this margin performance, do you think that's enough to lead to a bit of a re-rating on the stock, as we've seen in today's trade also, about 3%, or you won't like to read too much into that?
Basically, the margin performance is more of a kind of a relief so far as the investor community is concerned, because there were concerns that the share of exports has been rising, the order book is getting skewed towards infrastructure side, and the kind of margins that have come, to some extent that has eased investor concerns so far as the margin outlook going forward. However, if you look at the trend of margins in the EPC business, it is typically in the range of 9 to 11, 12%, that kind of a range. So these margins are on the higher side as compared to the historical trend. We would be looking more at 9 to 10% margins on a sustainable basis.
Okay. Sanjeev, can you just give us a sense on what led to the margin performance? If you look at the P&L and if you went through it, was it the exclusion of the hydrocarbon business also to a certain extent that helped in the performance of the business?
Yeah, to some extent. If we look at the EBITDA margins that were reported in the first and second quarter in the hydrocarbon business, those were a bit inferior to the parent margins at the parent level. So that could be one of the factors. The other factor was the infrastructure business, which constitutes around 60-65% of the revenues, and that grew at a very robust way. And apart from that, there were positive tailwinds coming from sale of properties in the Powai development. And also the shipbuilding, which is basically housed under others category. In that segment, there were only minor losses. Most of the losses were to some extent taken in the second quarter itself. So that in a way led to a margin beat in this quarter.
So what is the sustainability of the margins, you think, and do you think that you would be revising your EPS or your FY15 estimates just based on any sort of improvement or sustainability of improvement in margins going forward?
We were looking at a downward bias so far as the margins are concerned in FY15, but after the third quarter numbers, we would temper our outlooks so far as the downside in the margins are concerned, and we would be comfortable at margins remaining stable in FY15 over FY14. So we are looking at a stable margin outlook, though if such margins trend continues, then there could be some upward bias to our FY15 margins, but largely we are quite comforting basically so far as the future margins are concerned after the numbers that they have reported.
Sanjeev, what about the cut in order book guidance? The market is not reacting to that, sort of ignored that. Why is that? I mean, is it no longer as important as it used to be? And what's your own call in terms of the order book for L&T going forward in terms of new orders? And do you think they'll be able to meet the revised guidance?
See, for meeting the revised guidance, they need to do around a similar kind of orders that they won in the third quarter. So around 23,000 crore they need to win in the fourth quarter. So typically fourth quarter is on the higher side, but since we are entering into election time frame, and to that extent there could be some impact on decision making. So what we are seeing is that the deferrals of order awarding is on the higher side. So there could be a possibility that some orders could get deferred into the next quarter, but on an overall basis the company has a canvas of around 1 lakh crore of orders that they are looking at to get awarded. So basically, it's a matter of a time frame. Some orders could get deferred. So that is the risk that we are seeing.
Okay, those are the Bharti Infratel numbers. There's been a 48% jump in the profitability to 410 crores, and that's also boosted by the other income, which has come in around 30 to 40 crores higher on a sequential basis. And like you can see, the stock is up around 1.6%. The revenue jump is not as much as the profitability, so the bottom line has definitely done better for Bharti Infratel this time. But Sanjeev, just wanted to focus on the working capital bit of L&T, because that, according to the bears on the street, is quite a concern in terms of why their working capital has been increasing every quarter. Would that be a problem, and how do you think the debt situation and the short-term working capital situation would pan out for L&T going forward?
Yeah, that is a negative takeaway that we took from the numbers. So that's why we look at the numbers as a mixed bag. While the margins were on the surprised us on a positive side, but clearly on the balance sheet side we see a bit of a deterioration. So the working capital to sales has continued to climb up, including in the third quarter. So as a result, what we have seen is that the cash flow from operations has been quite marginal. So that is one factor that we need to monitor. We want to see revenue growth, margins coming at expected levels, but cash flow generation is also equally important, because in the future they also need to infuse some cash so far as their development projects are concerned. So that is one negative takeaway that we have taken from these numbers.
Okay, finally then, what's your call on the stock, and would you be changing your numbers after what happened yesterday?
No, we have largely maintained our numbers, and our call on the stock has been that we view the stock at these levels at more or less fairly valued, and our target price is 1079. So we are recommending investors to buy the stock on any declines from these levels.
Okay, Sanjeev, the 1079 target price is very close to where the stock is currently trading at. What would be the upside potential to your target price, and if you have one?
As I said, that we are recommending investors to buy stock on decline. So if the stock comes to, let's say, sub 1000 levels at around 980, 990, that could be a decent upside for our target price of 1079. So those could be our levels wherein we could turn buyers in the stock.
All right. Thanks very much for joining in, Sanjeev. So that is the view coming in from Kotak. Buy on declines is what they're recommending. Target price at 1079 for L&T.